Hi everyone and welcome back to this week's video. Today I want to focus on my investment goals and in particular what they are for the next 3 years. If you watched my first video, you'll see that I initially considered 5 different sources of passive income before making my first investment. So initially I considered buying an extra property and renting it out. Then I looked at joining a peer-to-peer lending group. I also considered starting a blog. I also considered creating some sort of online course. And my other final consideration was investing in dividend paying stocks. So hopefully you'll have seen some of my previous videos and know already that dividend paying stocks is the initial route that I have taken so far. If you want to check out my dividend portfolio and how it started, feel free to check out the link above. So although dividend stocks are currently my only source of passive income, I do plan to diversify outside of this in the coming years. As you can see here, currently 100% of my passive income comes from my dividend portfolio. However, in the next 18 months or so, I plan to purchase my first rental property. Although I still plan to grow my dividend portfolio significantly during this time as well, I reckon there will be approximately a 60-40 split, with 60% of my passive income coming from my dividend payments and 40% from the net gains a rental property is likely to produce. So I'd be keen to know your thoughts on this. What do you guys think? Does moving into rental properties sound like a wise next step? Further down the line again, hopefully within the next 3 years or so, I would like to add a third source of passive income. I'm not quite set on what this will be just yet. Maybe I'll start some sort of blog or online course. Who knows? But I still reckon even then my dividend portfolio will be providing the lion's share of my passive income. So although I want to diversify further in the future, right now and for the next 18 months or so, I will be solely focused on growing my dividend portfolio. Therefore, for the remainder of this video, I will be focusing on my investment goals relating to dividend stocks and my portfolio. So if you've seen my previous videos, you will know that I have investment funds held within an ISA and individual dividend paying stocks within another separate account. So let's firstly take a look at the Icer account. Currently I have £5,925 held within this account. Here in the UK, the current ISA limit is £20,000. After doing some quick calculations, I reckon it will be approximately 2.5 years until I am able to invest £20,000 in a given tax year. It's also worth noting that I currently make use of my ISA allowance elsewhere, so I do reckon it'll still be a few years yet until I can fully maximise my benefits with dividends coming from stocks and shares within my tax-free ISA account. Hopefully I'm doing a good job explaining this okay. Hence, if we go back to the bar chart, a balance of £20,000 in February 2022. Of course, this doesn't include any growth coming from each of the funds, so hopefully I will actually reach a balance of £20,000 even sooner again. Next then, I have another account which is taxable and contains my individual stocks. Again, basing this on the UK tax system, you can earn up to £2,000 in dividend payments before paying any tax. If I do some quick calculations then, so I'll say that 5% yield is my target and I reckon this is definitely achievable. So 5% of £40,000 is £2,000. Hence, if I want to reach my maximum tax-free allowance of dividend payments, I will need to be holding approximately £40,000 of stocks and shares within this account. So there's currently £13,815 within this account, and I reckon it'll take about 3 years to reach the 40k mark. Hence the date here of October 2022 on the graph and the timeline attached to this video of 3 years. Collectively then, across the two accounts within 3 years, I should be holding about £60,000 of investments, with dividends producing an annual passive income of £3,000 or so. So we've seen what account balances I want to achieve in the next 3 years. Now let's take a look at how my holdings are spread across different industries and what I want to achieve here in the next 3 years. So this is the current makeup of my portfolio, and as you can see here, oil and gas accounts for almost 1/5 of my overall portfolio. This is coming from my holdings in Royal Dutch Shell and BP. Both of them I see as nice holdings in my personal opinion, and they pay out a quarterly dividend. The second biggest industry sector within my portfolio is life insurance, which is being made up of Aviva and Legal & General. And then the third biggest is tobacco, which is 13.3% share of my portfolio, and again is made up of two separate holdings, this time British American Tobacco and Imperial Brands. After that, no other industry exceeds a 10% share of my portfolio, and this also happens to be my overall target for the next 3 years, ensuring that no single industry accounts for more than 10% of my portfolio. I feel like this is a good method of minimizing risk and exposure to any large downturns in a particular industry or sector. So I'll need to invest less in the likes of oil, tobacco and life insurance companies. Next then I want to detail targets relating to my actual dividend payments. So let's bring up a section from my Google Sheets tracker. If you want to check this out in a bit more detail, I will put the link in above. It's really columns M and N that I'm most interested in here. Column N is the frequency at which each holding is paying a dividend, currently totaling 46. Therefore, I can expect to receive 46 individual dividend payments throughout any given year. A target that I really set myself at the beginning of this process was to reach a total of 52 payments, so on average I would be receiving payments every single week of the year. As I'm already very close to 52, I'm going to double this to 104, so on average I'll be receiving 2 dividend payments every week of the year. Next then is column N, detailing the current yield for each holding, with an average down the bottom here of 5.79%. So my 3-year target is to maintain an average yield of at least 5%, as I believe this is achievable and also a good return on my investment. Well, that's it, an overview of what I want to achieve in the next 3 years. Just to summarise then, firstly, I want to maximise my Icer account and have £20,000 invested here. Secondly, I'm aiming to have £40,000 invested in individual shares, as my dividend returns on this level of investment should still be tax-free. I also see this as a realistic balance to achieve within a 3-year period. Next then, I want to maintain an average dividend yield of at least 5%. And I also want to ensure that in 3 years' time, no single industry is accounting for more than 10% of my portfolio. Next then, I want to be receiving 104 dividend payments annually, at least, as this calculates out as 2 per week on average. I also mentioned at the beginning of the video, I want to purchase my first rental property in the next 18 months. And finally then, by the end of the 3-year period, I also want to be generating a third source of passive income, which is yet to be determined. Well everyone, that's pretty much it for this week's video. As always, if you enjoyed the video, I would really appreciate it if you would hit the like button. It's always reassuring to know that people are enjoying the videos and finding them of some interest. Likewise, please subscribe to the channel so you can stay up to date with my investment journey. Finally, I'll leave some links here to other videos on the channel that are worth checking out if you haven't done so already. Once again, thank you very much for watching, and I look forward to your feedback, and stay tuned for another video very soon.